Okay, today is February the 3rd, 2014. In this video, we're going to take a look at the S&P 500, and also I'm going to go to a day trade that I did on AOL and kind of give you a little bit insight of one of the possibility of doing day trading. Because under this this particular volatile market environment, one can't hold on to a trade too long. And I think the only viable tactic right now is essentially, quick short, trade such as day trade. So, but before I get to, doing a trade review on that AOL trade that I did today, let's take a look at the S&P 500. The market really sort of continuing what January month ended with on a downtone. And basically, the Dow Jones went down over 300 point, and the S&P went down just slightly a little bit more than 40 point. And recall this weekend that I put up a video, and we're talking about this particular trend line here. We were looking at the possibility of maybe getting a bounce off of this trend line and possibly get back up to this pivot level somewhere around near the 78.6 Fibonacci retracement near this 1805, 1807 level. We're looking at the 1772. Right now, today, we saw this 1772, essentially this 61.8 Fibonacci retracement level kind of got broken down because you could see some of these pivot level. Let me close in on that and maybe we could get a closer look on those numbers. So you can see that here's this pivot low here, and there's another pivot low which is somewhere back in October, which is 1746. That's the point that we were kind of watching after we booked the 1772 here. These little pivots, these intraday low here, and also somewhere around this particular these high closing level. So you see there's quite a number. I was watching at this 1770 level, this region, and as soon as it broke, the markets essentially just kind of collapsed and just went pretty much downward all day long. So right now, we kind of looking at the possibility of might coming down to test the 1725 area, which is this particular closing high on the mid-September last year near the 1725.52. So we'll see how it's going to do tomorrow or during the coming day, because the market has been down for quite an amount, and it's due for a little bit of a bounce. And also the other thing is that we are having so many people leaning on one side of the market right now, which is on the short side or on the downside. And we all know that most of the time the market doesn't do what most of people anticipate, and which is most of the people is anticipating more downside. So just kind of be prepared for the unexpected, and the unexpected is maybe we get a little bit of a bounce. So don't try to be a hero and go try to short this market right now if you're not already having some short position on. Otherwise, you might be get caught as soon as it's this market kind of get a maybe a reversal or possibly just a strong dead cat bounce. So essentially that's what we're looking at right now. For the S&P 500, see could it work itself back up and get a little bounce and possibly come back and test the 1772 level that was broken today, or it might come down and watch it to see can it find support at this 1725 level here. Okay, so let's switch over and take a look at AOL. Like I was saying, at AOL right now with the market, the best thing to do is probably stand on the sideline and wait for the dust to settle. If you need to trade, then basically you might want to switch some tactic and go onto some real quick trade or some day trading. And looking at AOL, I've been trading AOL for the last couple of weeks, and essentially I was, been looking at this. The first trade a while back was essentially on the break of this particular baseline. And once I got in, it was basically for a little bit of a swing trade. And when it got in, got the pop, I scaled out. So got to the point that scaled out, and then when it come up here, when it pulled back, I basically exited the trade, and then ever since I kind of stalking it. So I was looking at this trend line here, see could we get a little bit of a bounce on the trend line, and then maybe get a resumption on the uptrend. But with the volatile market, essentially today I was kind of watching it, and all of a sudden I was seeing a surge on AOL right near the open, shortly after the open. So I kind of have to let me switch over to the 10-minute chart, and then we go take a look at AOL. So essentially, this whole entire price action is today's trading price action. You can see that it opened with a gap up, and these are 10-minute candle. So I'm just putting up a 10-minute candle chart here. So each bar is a 10-minute represent 10 minutes of trading. And usually I do not trade on the open or like to even trade in the first 30 minutes. But today I see the surge. So essentially after AOL have formed two candle, and I was looking forward to make a move to come up when it break above this high of this particular candle. So once it move up there, I put in an order and got in, and I think I got in somewhere around 47.70, and the stop that I'm playing is actually the low of this particular candle here, because I look at it the way that I interpret it to say is that if this is a true breakout to go up, to a run up to a higher price, then it shouldn't have any business come back and tag this low, because it already came down and tagged this low, and it came up and broke this high when I got in. So if it came back down, then essentially it just tell me that I'm wrong. So I need to just get out, take my losses, and get out. So as it come up, and here again you see this two candle, this pair candle. We call it two is the top, and I recall. If you recall, I believe on one of the recent video that I did, I wasn't sure was it this weekend or sometime last week. I talked about how to combine two candle and get one candle. And essentially, you look at this, these this these two candle here, if you combine it, it's just like a shooting star doji. Essentially, extension of what I was looking at is if you have a, let's say, a candle price pattern formation, something like this, right? You got this doji candle. This right here sort of signified there's some, exhaustion of buying, and it just, closed down here, and essentially you want to get out when you see this kind of stuff. And this is basically what this combination of candle represent. Because if you take this right here, right, this is the length of the wick of that candle. Okay, so if I just show that, uh, okay, so if I add the open and the close of these candle, take the first open and do the close. So essentially, I'm getting a little bit of a body here, very small candle body. Right? Okay, so this looked like a doji candle, a shooting star of a doji, okay? And then you see essentially this is the formation that I'm seeing here. So essentially, hey, look, once it breaks through this, you might as well get out because it doesn't look good. Take your profit and run. I mean, that's how I did it today. As soon as I saw this, I'm just out. So essentially, you got in somewhere here, you run it up. When it come down with this kind of price action, I'm out. Then on day trading, usually, you just kind of do it real quick and make your money and done with it, okay? Because you don't want to overstay. So again, you basically have to know what you intend to do. How are you going to trade this when you get into the trade? Remember, I also tweeted, I think on a weekend, to say you have to know who you are when you're making the trade. Are you a trader, investor? Even if you're a trader, in this case, are you a swing trader, position trader, or a day trader? So when I got into this trade, I already made up my mind. I'm going to day trade this guy. Okay, so there's no if but about it of holding this trade overnight or for a big swing or whatever. Right? It's purely trading off of price action. Okay, so hopefully, that kind of give you a little bit of an insight on one way of doing day trading is not the only way. And it just happened this trade worked out for me today. Okay, good luck.